Hi, my name's Peter Clare, as you know, and I'm a tax consultant. I thought today that I would give you half a dozen tips, 3 if you're self-employed and 3 if you're an employee, to help you save a little bit of money, especially in these times of recession. Let's start with employees first. In the budget, the Chancellor magnanimously raised the mileage rate to 45p. So if you run your car for your employer's business, you can charge 45p per mile without keeping any detailed records such as fuel receipts, etc., etc. Likewise, the employer can give you £2 per week if you work from your home, and again that doesn't need any receipts. Obviously amounts over that need to, but we're not going to touch on that today. The final thing, if you're an employee, and one that's badly underclaimed, is expenses that you meet on behalf of your employer. Now you probably think you do. What about clothing? What about subscriptions? What about laundering the clothing that your employer provides? I mean, so many people today are in t-shirts and sweatshirts with their employer's logo. You can clean those at home in your washing machine with your family laundry, and you can charge a small amount against your tax. I'm not saying be stupid and claim huge amounts, a couple of pounds a week, but that will save you £20 a year. Then we move on to the self-employed. Today, time has never been more right to incorporate your business. Even small businesses do think about incorporating. You've got tax rates of 40 and 50% as an individual, and you've got 20% corporation tax. Now there are problems if you withdraw all your profit, but then we can work on that. The point being that if you then have a remuneration strategy of a small salary and dividends, you can dump the good old national insurance. Then, if you do incorporate your business, watch to make sure you claim your overlap relief. If your year end is other than the 5th of April, and if you've been in business since 1996, you've got some what we call overlap relief. Talk to your accountant about that. And the final one that's so obvious but people overlook, we're shortly coming to the 31st of July. The Inland Revenue will want another slice of tax from you. Now, if your profits in the last trading year have gone down on the previous year, you will have paid tax based on the previous year's increased profits. So if you go ahead and pay your second instalment payment on account based on that previous year's profits, you're going to overpay. So if you think you're in that scenario, do have a word with your accountant. That's it for today. Follow this site and we hope to give you more tips in the future. Thank you for listening.